Yeah, the R&D tax programs are the federal government's primary support for innovation in Australia. And that's innovation support all the way from the big end, from your big corporates, all the way through your mediums and your smalls into early stages and startup companies. And one of the good things about R&D tax for startups is that it's a cash response for them. So if they incur costs, they pay their money out. At the end of the year, they actually self-assess and claim back what they would have otherwise just had as tax losses. So it's a great cash incentive for startups to be helping them obviously grow and develop their business for the coming years of more commercialisation. Yeah, qualification for R&D tax is relatively simple, and that's again another great part of the program, and particularly for startups. Why it makes it so attractive for them is it's not onerous for them. So what happens is first of all they have to be a company. So a lot of businesses, one of the things they often get wrong is they're businesses, they're not companies. So as long as they're set up as a company, they're incurring the costs and they're paying the costs appropriately. They get to the end of the financial year, and it's a two-step process. They register the project and the activities with AusIndustry. So they have to basically fill in the AusIndustry form, give that to AusIndustry. Once that's processed by AusIndustry, they go to the tax return and claim the money back through the tax return. So relatively simple two-step process, but bearing in mind obviously that you've got two government agencies that are looking after them, and therefore they've got to make sure that they're meeting the qualifications and requirements for each government agency. But if they do that, because it's self-assessment and retrospective, once they've done it, they get the money back. Well, a lot of startups get confused with this. They compare it to grants and they go, well, I haven't spent the money yet. I don't know where I'm going. This is what I'm going to do. Well, that's fine. That's where grants fit into it. But R&D tax is about what you've done, what you've already spent. Let's get a little bit of that money back. Yeah, one of the hard parts about the R&D tax program is what actually qualifies, and particularly for startups, where everything they do is normally innovative, novel, it's different. But there's different in two contexts for R&D tax. There's novel and different that's commercial, and there's novel and different in R&D that's technical, and that's what we're looking for R&D tax. There has to be a technical element of innovation, of novelty, and what we're looking for is a knowledge gap. So say, well, when you started that project, what was technically different? What is it that you didn't know how to do, or your peers or your competitors couldn't already do? And so therefore you've got a knowledge gap and you have to create new knowledge. It comes in two senses. There's the top level, this is my project and this is what's going to make it different and special and better than everybody else. That's fine, that's the big picture difference, but you've got to the companies, you've got to the staff, you've got to drill down into that and say within that, what are the specific technical issues that we have to resolve? What are the algorithms we're building? What are the features or functions that we're trying to make that we don't know how to work? But as well, we've always got to remember that we don't know how it's going to work from a technical perspective. It's not, is a client going to buy it? Am I going to sell much? Am I going to make any money of it? That's not what qualifies as R&D tax. We've always got to come back to what makes it technically different. What are the tests, the experiments and trials that the company is undertaking to overcome that knowledge gap is also really important. Because if they can't demonstrate an experiment, what AusIndustry calls an experiment, a test, a trial, and that can be in the lab, but it also can be in the real world. It can be in a beta, or it can be with clients that are a large rollout stage, as long as there's a true test to understand what the technical difference is between the hypothesis, if you like, the requirement for the activities to do something different. They have things they're testing, variables and assumptions. They do a trial, it works, fantastic, then perhaps they can scale it up and start selling it commercially then. But what are the tests and trials we're doing? Yeah, obviously this R&D tax is about the cash benefit that the companies receive, and that's a really important factor for startups. A lot of them, they're in losses. So they think that they shouldn't be claiming R&D tax because it's tax-based, and therefore if they're not paying tax, there's nothing to qualify for. But that's unfortunately the complete opposite. The program is fantastic for those companies that are in losses because they actually get to cash out their R&D expenses at 45 cents in the dollar. So it's a 45% refund. They've got to spend at least $20,000 in the year on R&D. Once they spend that $20,000, if they've got more than $20,000 worth of losses, tax losses, they actually turn those $20,000, if that's how much they've spent, they turn that into a 45% rebate. So they get a check back from the ATO for $9,000. So it's a fantastic program at that early stage where they're looking to reinvest and continue to grow and build the company, that cash back. And that's really why the ATO, the government, brought in the return, the tax rebate offset, because they want the companies to get the cash back. Because they realise that yes, if we can help build that company, with the losses basically cashed out now rather than the future tax benefit of those losses. Hopefully those companies are bigger, better and stronger for the future. Yeah, well, startups are actually quite, they float between being very simple R&D tax claimants and having some quite interesting challenges. Some of the things they often get caught out with are, first of all, they're not companies. They think because they've got, if you like, a business registration that they qualify. That's a business ABN. It's an ABN is a business registration. They need a company registration. So they need to incorporate a real company and they have an ACN. So they need to be spending the money through a company. And also they can't, if the company didn't exist as of before they incurred those costs, they can't claim costs before the company existed because the company wasn't there. So they can only claim the costs that have been incurred in the company. They can also only claim costs that are actually incurred, and if it's the founders, the original developers of the technology, they also have to pay themselves. So a lot of founders obviously can't afford to pay themselves much. They pay very little, if anything, often. But they may be worth a lot more, and they're booking costs to the company, hoping to pay that in the future. They unfortunately can't claim those costs until they're actually paid. So it's normally just what's paid to founders. They also get confused with things like trusts and corporate structures and the bigger entities. So they set up some quite fancy structures sometimes. Just got to bring it back to basics, look at the company, where the costs incurred in the company. They get confused with, because a company is often 100% for R&D. So they set up a company and said, yep, I'm going to do all this R&D. Everything I do must be R&D because everything I spend must be R&D. You get not quite. There are certain costs that aren't eligible. Some basic corporate costs that you just can't claim as R&D tax costs because they're, if you like, for accounting fees, or they might be for bank fees, or patents, or websites. A lot of corporate costs, yes, the company might be 100% R&D, but those costs are outside of the scope of the R&D and they don't qualify as well. You've got to be really careful that only capturing the direct or the very closely associated business overheads that go with the R&D. These days as well, a lot of companies are going overseas, particularly in software, to get some work done, which is great. Skills are global. A company can quite easily put out a seek ad and get responses from anywhere in the world for somebody to do some software development for them. But any of those R&D activities, tasks that are undertaken overseas, can't be claimed as R&D tax. So companies have got to be very careful. Even if it's going through, if you like, an Australian consulting company, you still can't claim it if it's overseas. So you can only claim it when the people are sitting in Australia. So really important to get that clarity for them, right? The other part they get confused with is what are R&D activities? And it comes back to that technical versus commercial difference. When businesses are starting and when they're growing and trying to raise funds or marketing and publishing themselves, they talk in a very generic corporate sense, which is perfect. R&D tax requires them to step that down a little bit. To say, okay, let's talk about the technical specifics of this project. What makes it R&D? That's what really fits into an R&D tax claim. Identifying the technical issues rather than just the commercial issues. Yeah, companies have got to be very careful with their R&D tax claim that they know what they're doing. This isn't free money. The government doesn't just give money away. So they've still got to, even though it's a self-assessment program, they've still got to, under the self-assessment rules, understand that they should be able to support and defend that at any stage. And that's from two avenues. So we've got the Oz Industry registration. So we're telling Oz Industry, these are the activities we've done. This is the technology development we've taken, and these are the experiments we've been doing. That's part one. Part two is obviously the ATO. So the ATO, you're telling, here's the costs I've claimed, this is why I believe those costs associated with those R&D activities. So the companies have got to be very mindful that at any stage, Oz Industry or the ATO could come and talk to them and say, well, prove that. Yep, self-assessment, you've said you've done, great story, but what evidence have you got? So companies have got to maintain good documentation from a technical perspective, particularly to identify, if you like, what that knowledge gap was, what that technical issue was they were trying to resolve, and the experiments. What experiments and tests and trials have they done? And that evidence can take any format, realistic. There doesn't have to be in a specific way, but it's got to exist. So there has to be something to say, well, we went to the market, this technical issue was not resolved. And you document that. How did you find that? Who have you spoken to? What research have you done? So documentation around that, file notes, email trails, whatever that might be. Even more importantly, when you build it and test it, whether that's internal or external, that test, that trial, what experimental notes have you kept? So, we've gone to a beta of 10 clients. 10 clients have tested it. This is the results that came back. These are the issues. This is how we're resolving it. This is what we're doing. So what is that reporting process that you're maintaining? A lot of companies in R&D phase, and even in big companies, they move on very quickly. They keep very basic notes, and sometimes that doesn't help them. So they have to stop, take a deep breath, make some notes, remembering that, again, like I said, this isn't free money. So if you want to get that rebate back, you want to get 45 cents in the dollar back, that's a lot of money. Therefore, make sure that you're claiming it, you're supporting that from a technical perspective. And obviously from a costing perspective, why is that cost R&D? So if it's time, so if the company's spending salaries, why and how are you justifying that salary percentage? So what are they keeping any time records, any documentation around what they've been doing from splitting their time up, and obviously contractors and other external costs they want to claim. Normally that's evidence through invoicing and part of contracts and arrangements might be in place. So financial costs, apart from time recording, normally relatively strong in startups. The technical evidence, the documents around what is R&D needs to normally be strengthened up a little bit. So that's the two primary avenues. Companies then have to be aware that Oz industry, particularly from an R&D tax perspective, are probably going to want to review them in maybe 1 to 3 or 4 years cycle. So if they keep claiming their R&D, at some point Oz industry is going to probably knock on the door and say, hey, can we have a look at what you're doing? You've said you've made these claims of R&D, but can you defend it? Can you please show me some evidence of that? Reasonable. It's fair enough for an investor, if you like. The tax office, the Australian government is giving them money back, so it's reasonable to expect that they might come out and ask them to prove that they've done it properly.